Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Chad Gallagher. Thanks for being on the show, Chad.
Awesome to be here. Thanks for having me.
Chad owns 200 units, a mixed residential, commercial, multifamily, half of which were purchased through syndication. He also owns SlateHouse, which is a property management and realty company that manages over 3,500 units across Pennsylvania, Maryland, and New Jersey, and helps investors acquire investment properties. He's also the host of the Real Estate Hackers podcast. Chad, thanks again for being on the show. Give the listeners a little more about your background and what you're focused on right now.
Yeah, it's awesome to be here. Thanks so much. My background actually started in technology. So I have an engineering degree and went into actually digital advertising, which is a bit different, obviously, than real estate. But I did that for a while and then started to invest myself in real estate. And as we grew our portfolio, we really felt like we wanted a property management company that was heavy on the tech side, that could scale with systems. And so that's when we actually built our own property management company. Which is now really where we spend all our focus, is on the property management side of helping both folks who may have a couple of units all the way to folks who syndicate that may have 200, 300, 400 units that they need managed, across the Mid-Atlantic. So we cover Maryland, New Jersey, and Pennsylvania.
Awesome. So, I want to come back to the scaling with tech and talk about how you all utilize that utilize technology so well. And but also one neat thing about you is that you all have done a syndication while also you're managing many properties for other syndicators, and I think it's odd to find management companies who are also syndicating their own deals and have knowledge of that side of the business. So tell us about the recent syndication that you all did.
Yeah, so ours was actually a little unique in that what we did it was a blind syndication in the sense of we raised the $2 million without actually having the assets identified. And what we did was basically tell the investors, look, we've been investing over the last 3 to 4 years and had kind of built up a track record. We kind of knew what we were doing and said that we thought there was a really big opportunity to go after really 3 to 15 unit buildings. And so essentially the theory was that the 1 to 2 unit building has a lot of demand, right? Both residential homeowners as well as that person who's just getting into real estate. And then the units that the buildings over 20 units have a lot of demand from folks who are doing big syndications and raising big money. And so we were kind of trying to split the two and say, look, let's go raise $2 million, build out a portfolio of, $7 to $8 million in real estate, but let's do that across a bunch of different properties across our kind of property management footprint. And in the theory, and it sort of played out, was that we could get better deals because the demand isn't as high for those buildings that kind of don't fit in either bucket.
So tell us a little more about, so you started raising money. That you called it a blind syndication. I don't think I've ever heard anyone call it that, but that's awesome. So you all were able to raise money, and obviously you leveraged your experience to be able to do that, correct? That's what you talked about?
Yeah, we did, and it was interesting. I mean, raising money, as anyone who's done it, it's until you've done it, you don't quite know what it's going to be like. I mean, sitting in front of someone asking him to write you a check for $100,000 is, I don't care how long you've been in real estate or it's just it's a new experience. And so, I was really lucky. We basically just we had a bunch of friends and family that had money they wanted to invest. They didn't understand real estate, but they wanted to diversify. I'm sure that's a story that a lot of syndicators have kind of gone through. But I was surprised it was amazing to me how many folks really wanted an outlet into real estate. And frankly, didn't want to know the details. They just wanted their money to be invested safely. That was really important to them. Someone they knew they could trust who's not going to just going to run off with their money. And yeah, so we just went around to friends and family and basically said, look, they also loved that we're an operator. It's interesting how, anyone who's been doing syndication knows that finding the asset's great, but how you're going to operate it day to day is just as important. So for us, the story was that basically we're going to find these 3 to 15 unit buildings, and then our property management company is going to actually manage it. And that was a story that people really could connect with.
I can see that. I mean, the operation is almost more important than the deal itself. If you can have a fabulous deal, but if you can't operate it, if you can't manage it well, then what's it matter?
Yeah, it's true. And the other thing I realized was, and so when we were doing the blind syndication, a lot of people said that's going to be harder to raise money because normally people like to raise money against an asset that they know is coming, right? This 50 unit building in Roanoke or whatever. But what I found was, I'm a numbers guy, and I wanted to go show them, well, here's what we're going to aim for, and at the end of the day, what I got back was, look, Chad, we trust you, we trust what you're doing, and we like your operations and your systems. And they kind of almost didn't want to get into the details. Right? They just said, look, use your best judgment. And so it's kind of an interesting experience for me, was just seeing how I think a lot of people who are really in real estate get so into the Excel pro forma and don't realize that for the average investor, they really just want a safe place to put their money. And the nitty gritty of a real estate pro forma is honestly more than they probably need. So
what types of properties did you end up syndicating?
Yeah, so we did a mixture, and that was part of the story of this, was that by buying different kinds of assets, not just one, the syndication would be a little bit less risky. And so we bought everything from some 3 to 4 unit buildings to we did buy a 15 unit building. And then we also actually bought an office building, which was not even part of the play. But what happened was our property management company was looking for a new headquarters that we could actually own, and found a building that we were able to buy for way under value because we were able to offer, essentially buy it in cash using the syndication money, and then get a bank loan. Essentially now we're about 3/4 of the way through that project. What we'll do then is about two-thirds already leased up. So finish leasing it up, actually turn it into a co-working space where our property management company will be one of the tenants of the building. Other kind of companies that we work with are also going to be joining us in there. And then essentially refinance the entire building, all owned by the syndication. So the syndication is going to own a wide variety of assets, from an office building, co-working space, to a 15 unit building, but also to some 3 to 4 unit buildings that are in different cities.
So it sounds like you all created a fund.
Mm-hmm.
Yeah.
Yep.
Okay.
Yeah. So we raised $2 million, and when it was all said and done, it'll own about $7 million in real estate. And we're excited.
Nice. No, that's awesome. That's awesome. And so now, what's the long-term plan for that fund and those properties? Or you just keep buying more, or they all have hold periods, or?
Yeah. So it's we told these investors that we were planning on holding for 15 to 20 years, which is also really unique. Yeah. It's not like we told them that they'd get out in 5. So this is money that they have set aside for long-term retirement. It's not a short-term play. And so the play is to literally hold these things for 10 to 20 years. A couple we may sell if we bought it, and a couple years in we realized it wasn't the right asset for us. It's not performing like we wanted, or it's something about it wasn't quite our model. But yeah, in general, we're going to hold these properties, like I said, for 10 to 20 years. And over time, basically just let the pay down the mortgages. And then we actually have an interesting decision where we could either sell the properties, or since these investors are really in it for the long haul, we could potentially even refi them and pay back the cash, but actually let the fund continue to own the asset if it makes sense. And then potentially give these investors some assets to pass on if they want. So it's kind of interesting the way we did this. Bunch of things that are a little unique, but this was what our investors wanted. They wanted a long-term play. They didn't want short-term money, and they're okay kind of making a long-term bet on real estate.
Yeah, that's very unique. I like that though. That's something I haven't heard before. Planning to hold them that long, and maybe even refi and just hold them a lot longer.
Yeah, because when you start going through the math of it, when you actually make that sale, between the taxes you're going to pay on it and the closing costs, if you compare that to a refinance, it's hard to argue you should sell the property. I mean, in fact, I can make a compelling argument that by refining after taxes, the investors are getting basically the same amount of money you would if you were to sell it. So if you have the right investors who are willing to put money aside and say, have at it for 20 plus years with no other terms attached to it, it gives you an opportunity to potentially make a really long-term bet that after taxes, hopefully will pay off really well for everybody.
So, I like that you are a syndicator. You're buying, you've owned lots of real estate. And then, if I was coming to you and talking to you about managing properties that I was looking at in your area, maybe you can speak to, I think about when I come into a property management company's office, I'll usually have 4 or 5 pages of questions. I really want to understand how you all do business. I want to understand, how you operate, right? Before I'm going to hand over this 100, 200 unit building, and say, okay, I'm going to trust you. And so, what does that normally look like for you? And maybe you could give some pointers to the listeners who are trying to find that management company, for their new syndication business.
Yeah. So at SlateHouse, it's interesting because, we've been doing this long enough. I kind of know what to expect on the questions. I actually start off by I spend 10 minutes explaining our company, which really cuts to answering a lot of their questions, how we do things, how we charge. I talk a lot about the technology we utilize. I think if there's one pointer that I would have, I think people don't ask enough about technology. I find they're very quick to ask about rates. They're very quick to ask about experience, and all of that is great. They want to see a contract. They want to start to try to whittle down the fees. And yet I try to explain to them that, look, we fundamentally believe that the future of real estate, like every other industry, is going to be backed in tech. And so we think that, if you're a good property management company, you better be utilizing the best technology, number one, and have a plan for what the next 3 or 5 years look like to adopt more technology and or build your own. And so I think that makes us, that's important to us, but I would just say to other folks out there, I think people don't dig enough on the technology front to really understand what property management companies are using.
And I think personally, I wouldn't always know what to ask about technology, and that's where I want you to help us also. So, I'm going to ask what software they use. Obviously, I'm familiar with numerous different, brands of software for management companies. But however, there's going to be other parts of the tech side that I wouldn't even know what to ask for. So help us know what we should ask, and let's go down the tech side.
Yeah. So here are some things that come to mind for me. One is, if you think about property management, a lot of it is kind of workflow oriented. So how does one of your property managers, your maintenance team, how do they know what to do next so they don't forget to do that task? So we spend a lot of time thinking about workflow. We have both a kind of a maintenance workflow technology where we're putting in work orders, but we also have just a broader, what we call our ticket system, where if an investor has something that a very specific task, increase the rent at this unit, send me a lease. What I find is that a lot of that communication sits in texts and emails and phone calls, which is I think super unoptimal because it relies on someone to actually remember to do a task. So we put all of our incoming requests either get put into a work order or a ticket. And that includes voicemails. So I would ask a lot about how does workflow work? And I would bring up some very specific examples. If my tenant has a question about their lease and they ask the question, how does that work? If I have something I need you to do, how does that work? Who am I talking to? And how is that person going to remember to do it? Because even the littlest things, you ask someone to winterize an apartment because it's vacant to make sure the pipes don't freeze. Well, that could be a $2,000 problem if someone just forgets to do that small little task. And every day, our company's getting thousands of tasks. Some are important and urgent. Some are much less important. But so I think a lot about workflow. And then I think a lot about tenant experience. So from a tenant point of view, everything from how is the tenant finding the apartment how are they booking a showing time? Our tenants can actually book showing times online. To once they move in, how do they request something? Do they have a tenant ledger? So I just think about, like, in the eyes of a tenant, how am I interacting with this property management company? And what kind of tech are you using to kind of enable that?
Are you tired of answering emails from investors about when they'll receive their K-1s? Let the real estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestatecpa.com/syndication. That's really good. So what do you suggest for workflow? Like, is there, obviously I've heard of, like, is it Trello and Asana and, things like that. Is there like some kind of task management system that you recommend?
Yeah. Yes. So we use a tech called Freshdesk. It's just like a super flexible ticketing system. You know what? I don't know if one is so much better than the other. We looked at a whole bunch, and I think they're somewhat interchangeable. The trick is adoption of the technology. So we found so we use AppFolio as our back-end database to manage properties. And then so we also use Freshdesk. We use about 12 different technology stacks. I find a lot of times property management companies, you ask them, what tech do you use? And they'll say whatever is their one database. And that'd be like a red flag for me a little bit, because in this day and age, if you're using one tech, you're just probably cutting things short. There's probably a lot more you can do. So we use Freshdesk as our way of, like, a ticketing system. And that even touches our customer service. So if someone calls in and our receptionist answers the phone, before they transfer the call to the property manager, they'll actually create a ticket as just another way to make sure that things don't get lost. So that property manager, if they answer the phone, they now have a second backup as a reminder. Imagine you're a property manager, you're on the road, you're driving around in the middle of a showing, you get a phone call, and the phone call is, hey, don't forget to make sure the heat's turned on so the pipes don't freeze, right? You'd like to think that property manager is going to go 100 for 100 to turn that into a request. We've found, there's some leakage there. And so what we try to do is make it a ticket so that there's kind of that second barrier to make sure things aren't forgotten.
So a question, maybe if you're managing my properties and I send you an email and ask you to, make sure the heat's turned on or whatever, make sure, what can we do about raising rents, or, you're going to create a task, and then so it's made sure that it's followed up on.
Yeah. And what we actually ask our owners to do, one better, is if they're up for it, just create the task out of the get-go. So they don't even have to email us. They could literally just create a task, which is great, because if the property manager is on vacation or anyone's gone, you just right away turn it into a task, and then our team assigns it to the right person, because the person who does the task may not be your property manager. I found that kind of like the old school way of doing property management is the property manager does everything. So the property manager does accounting, the property manager does billing, the property manager answers the phone when the tenant has a question, they do leasing, they're scheduling maintenance. And our approach is actually, yes, you still have a property manager, but we have other folks who specialize in accounting. So the accounting people should be answering the accounting questions, probably not your property manager. So it's great is that you kind of bring that task in, it can be assigned very quickly to whoever should actually answer it.
So I guess as an owner or operator, I would have an account like in Freshdesk where I could log in and create a task for you or something.
Yep. Yeah.
Wow.
Yeah, it's great.
Yeah, that's a great tool right there. It takes out the middleman too. It takes out that email process or the text or all that stuff.
And I'll give you one more example, something that we're actually working on a bit more in-house, but we also feel like even something like the eviction process is something where tech and systems can really improve things. So we're spending some time, actually we're even working at the state level to try to improve the ability to both file easier. Right now, filing evictions is this really clunky old school process, but all the way then to managing that task. And whether that's through Excel or some homegrown technology you build, we just find it's really important to not just rely on a property manager to hopefully remember to file an eviction and follow up on that eviction, and actually just everything else has to have a process. I think that for syndicators, I guess like the one thing I'm such a big believer in is like process and using tech to kind of nail that process down. Because if you own 2 units, you don't really need process. You can kind of get by just, you can go out and see the property every month if you wanted to, right? To kind of check in on the tenants. You could collect rent by hand, but if you're going to try to syndicate and potentially build a portfolio of 300-400 units, you can't be going door to door collecting rent, and you're going to have to rely on a team. I find that if you can really work with folks who have nailed process and systems, it's just much easier to be able to rely on returns being more expected because you have a system in place, I guess.
Yeah. Is there any other type of tech that you would recommend that we make sure our management company has in place?
So we use one that is, I think it's really important, and that is our tenants can book showing times online, which I find a lot of people don't utilize that. But if you think about, and it's interesting, I'll meet with owners and they'll say, "Oh, my tenants won't do that," or and I don't think they realize that the average tenant, you figure, if you're looking for an apartment, we look at the data. 78% of people are looking for units on their phone now. So it's not even on a laptop; it's actually on their phone. And if it's a Sunday at 4:00, we just find people do not want to have to call. Right? It sounds ridiculous, but they'd rather just book it right there. And so we're a big believer in being able to book showing times online, sync with the property manager's calendar so you can see when it's available. We think find out works really well.
I like that a lot. I mean, most people, or if they're young at all these days, they don't want to make eye contact with you, much less talk to you. So I can see where, I mean, obviously they're looking at it on their phone and I mean, where they could just hit the button. I mean, that's awesome. And then it takes out all that time that you're having to answer the phone and tell them about the apartment and figure out your calendar and their calendar.
Yeah, it's the back and forth. And if you think about so the reality of how this plays out, and this is why I think it's so important. The reality is the person's probably not calling you at 11 o'clock on a Monday because they're working at 11 o'clock on a Monday, hopefully, right? So, they're looking at 2 o'clock on Sunday when honestly your property manager is not working and maybe even your call center is not up. And so to be able to book that showing time, as opposed to if you call and leave a voicemail, then the property management company calls back at 11 o'clock on Monday when the person's at work. Then at 6 o'clock at night, the person's off work. Then they call, but then you guys are closed. It's just like a really bad back and forth, as opposed to just here's when we're available. Book a time, and kind of you're off and running.
Awesome. And so, Chad, going back to the syndication business a little bit, what's been the hardest part of the syndication process for you?
That's a good question. I'm going to give you 2, actually. Okay. So the first was honestly the first meeting I ever had where I asked someone to invest money. I think I just remember being so nervous and just thinking, there's no way this person's going to trust me with their money. And I think just getting over that first meeting of looking someone in the eye and saying, this is a safe investment for you and you should trust me. I mean, that's just hard. And I think I would imagine most people who have had to do that would agree. It gets much easier, right? As you kind of have worked through those conversations, you feel more confident and you realize that, you are providing a service that they probably need. But the first meeting I ever did, I was just unbelievably nervous. And then I think the second thing, and this is really unique to how we did it, and probably the only thing that makes me somewhat second guess if we made the right decision, is just in terms of operating a syndication, we went out and we bought, let's call it like 80 units or so. If you were to buy 80 units in one building, right, it's one building, it's a lot easier to handle everything from the accounting to you're closing on one deal, whereas we closed on 15 to 20 deals, right? To kind of make up our syndication. And I remember saying wow, we've got systems in place and we'll be able to handle this. And it honestly, I think we did have systems in place, but it's still been really taxing from an operator perspective of just managing that many assets inside the syndication. And that's probably one of those things that everyone says, yeah, that makes a lot of sense. And it does. But I think that, clearly there is a lot of value to being able to go in and secure one asset and put a lot of money at work at once, from both kind of the deal closing, but even just on the ongoing process, everything from doing taxes to just checking in on the assets. Even if you have a good property management company, the syndicator still has an obligation to really check in on each property. And, that's harder if you have a bunch as opposed to just one.
Yeah. Yeah. And as far as that first call, that first meeting, like you're talking about, no matter how many times people tell you, you have to realize that you're providing an opportunity to them instead of asking for money. Like, you're still going to be nervous, you're still going to be nervous, but you just got to get in there and do it. You just got to get in there and do it and get it over with. And after so many times, it's not a big deal anymore.
Yeah. I mean, I have sweaty hands when I'm nervous. So I remember I was definitely, and it was one of my friends, and it was his friend and his wife. And I mean, they could tell I was nervous. Right. And, I think that's one of the things is that you're probably talking to people you actually know. And I mean, I found I just tried to honestly just be myself and just not try to be this perfect investor who knows all the answers, right? I think that was the other thing, was at first I was trying to have all the answers and instead realized that, look, I mean, I know so much more about real estate investing than, call it 98% of people out there. And for sure the people I was talking to that, you don't have to know all the answers. They're happy if you know most of the answers and have well thought out answers, and have basically told them that some of these things I don't know. I mean, they said, how many properties are you going to buy? In my case, I didn't actually know how many, but I had a plan and some logic of what we're going to do. I found that was what they were looking for.
What's something right now that other people can do to improve their syndication business that you would recommend?
Improve their syndication business. I mean, I think one thing is to not feel the need to have to just syndicate 50 to 100 unit complexes. I find, a lot of people who want to syndicate 50 to 100 unit complexes. And I really do think there's an opportunity to syndicate smaller deals. And we maybe went smaller than you had to, but I think that there's still a play there to go out and get safe assets that are, we bought a 15 unit building and we bought it for $550K, and that thing is probably worth $900,000 or so. And that's a great syndication. It really is. That's not a bad syndication. And I think there's a lot more of those than there are 100 unit deals, especially right now, because it's so popular. There's so much money with low interest rates flying in here. And yet there's still a lot of people, in particular older folks, who have owned 10 to 20 unit buildings for a long period of time, built in the 70s and 80s, that make for great syndication plays. So I think that's one thing, is not feeling like you have to do this 50 to 100 unit complex and feeling like there might actually be a really nice play there. It might be a little bit smaller, but a single or a double along the way isn't the worst thing either.
And what's the number one thing that's contributed to your success?
I often tell people that I use like a basketball analogy in that we take a lot of shots. And so, I've said this before on our own podcast, and I think it's true, is that we always felt like we're never going to shoot 100% and we're going to make mistakes along the way, but we're just going to shoot a lot. And when I say shoot a lot, right, I mean, that's in everything. That means we're going to go to a lot of meetups, because I don't know which meetup's going to be the one where I meet the person who's going to really help me. It means we're going to put in a lot of offers because we don't quite know which one's going to stick and which one's not going to stick. On the prime management side, we're going to talk to a lot of owners, and we're just going to get into a lot of conversations. And we realize that a lot of those conversations are going to be a waste of time, but we want to take a lot of shots. And I think that's like a theme that has really helped us a lot is just being okay with, I mean, it sounds so cliche to say be willing to fail. I want to kind of take it a step further. It's not just being willing to fail. It's just trying a lot. and, because I think you can control. You can control if every offer you put in is going to be accepted or not. But if you put in 50, you can control that number. And as the law of just big numbers go, you talk to enough investors, you talk to enough homeowners, or whatever you're trying to do, you can actually shoot you don't have to be as accurate, I guess what I'm trying to say, right? So you can actually convert on less if you increase your volume, like any salesperson, I guess, would probably tell you. And so I think that's been something that really helped us. And I think the reason I point to that so often is I think any investor could do that, right? Not every investor can go out and find that city that's going to take off and double in value over the next 5 years. That's hard, and it's really hard to coach. But what you can control is, how many times are you repeating and trying to close or do whatever you're trying to do. So I think that's something that investors can kind of take to heart.
How do you give back?
What do you mean?
Just anyway, people like to donate to certain things, or maybe
how do you give back?
Give back, mentor, anything like that. How do you give back?
Yeah. Sorry, I didn't hear what you said first. Yeah, so we do a couple different things. So one thing we do is we run free meetups. So we run 7 or 8 different free meetups, and that sounds like a weird give back, but I find that I end up talking to a lot of people in those meetups that are just getting started. And, those are conversations where, I feel like I was there. 6 years ago, 7 years ago, I didn't know what I was doing. And I was the one sitting in the back row of the meetup. Luckily, it was free, right? Because if they had charged me $100 to get in, I'm not sure I would have come, right? And so I do believe, I don't know, I know a lot of people charge for meetups, but I think there's something to a free meetup that really lowers the bar, that says anyone, anywhere in life, at any age, is welcome to come learn. And we have people that come to our meetups who are literally 17 years old. They're still in high school, and they can learn all the way up to one of our meetups recently, we had an 80-year-old grandmother who's still investing, right? And to me, that's just awesome. Like couldn't be more equal opportunity wherever you are. We don't ask you how much money you have coming in or what have you done before. It's totally free. It's not a money-making play for us. And I love that. I love connecting people and kind of helping people out. Maybe that person who hasn't had someone up till now who can kind of educate them and sit down with them. And now, we can, in a way that could literally change their life. And I think that's pretty impactful.
That is impactful. Chad, you've been a great guest. I really appreciate your time and being on the show and just laying out. You raised $2 million for your syndication, and I thought it was really neat. You're a blind syndication at that. That's very interesting, and that you did that, and how you leveraged your experience in being an operator or your management company. It also just, how you went through technology and things that we need to be thinking about when we're interviewing management companies and just how technology is changing things. But tell the listeners how they can learn more about you, your business, your podcast, and if they're local, maybe they can come to a meetup. Yeah, totally. So our company's called SlateHouse Group. The website's SlateHouseGroup.com. I'll even give you my email. It's Chad, CHAD, @SlateHouseGroup.com. And if you go there, you'll see a list of our meetups, as well as kind of more info on our property management company. And then our podcast is called Real Estate Hackers. So essentially the idea of the podcast was, it kind of gets back to my kind of tech roots, is kind of highlighting people's stories of how they built real estate from nothing. And so we kind of talk to people
not so much about how they went from 300 units to 500 units, which often make great stories, but more of these people who've been really successful. I want to know, like, how did you get started? How did you get off the ground? And what was maybe your best hack? I love those stories because I think they force people to be creative, and I think people can learn a lot. So check us out. It's realestatehackers.com, or the podcast is Real Estate Hackers.
Awesome. Thanks so much, Chad. I really appreciate your time, and I appreciate the listeners being with us today. I hope you all will also go to lifebridgecapital.com and connect with me, and go to the Real Estate Syndication Show Facebook group so we can all learn from experts like Chad and other guests, and grow our businesses together. Thanks again, Chad, and we'll talk to all the listeners again tomorrow.
All right. Thanks so much. This is great.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.